through pride and ego and friends that finessed me, which triggered a downfall. I lost everything, including my psychology and discipline. Feels like I'm starting over from a losing trader. Yeah, I mean, the thing is, unfortunately, in this trading stuff, there's been so many people who have messaged in horror stories. Somebody messaged in earlier this week, I lost $40,000 just paying for prop firm challenges and never got a payout. There's so many nightmare stories out there, unfortunately, in the trading space. People who lose everything, people who make big mistakes, people who get scammed, there's a lot of ugliness out there. All you can do in the trading world is recognize that anything that seems too good to be true almost certainly is. Everything is a grind. Everything is a lot of work. To get good at trading is a lot of work. To grow a trading account is a ton of work and very unlikely to be done quickly without blowing up. All of the principles that we talk about over and over and over, discipline, patience, consistency. I know that stuff sounds, it sounds like frou-frou, whatever motivational junk that you see but it's so important for trading because a lot of people lose everything in this stuff because they don't take things slow. They rush everything. So all I can say to people who are going through serious struggle with this stuff is, forgive yourself for mistakes that you made in the past and then never make them again and never try and take shortcuts in this stuff. Embrace the long game, embrace the hard work that's going to go into improving your approach, and just never give up. Truly, like there's no other way to say it. Like you have to just have incredible grit to make it in trading, and there's no getting around that. Everybody I know who's a profitable trader has gone through a tremendous amount of suffering to get there. That's the reality. It's going to take a lot of time and effort. And if you're down for that, if you're like, I still love it and I accept that it's going to be hard, it's just like working out and getting in great shape. Like that's going to take a lot of work and effort, but I love it. Like if that's you, you get it. If that's not you, if you're like, I'm not willing to invest years of my life, blood, sweat, and tears and money and time and all that, then trading might not be right for you. And that's okay to acknowledge and do other things that you care more passionately about. Up next, guys, we got Chris Pulver taking over the show. Stay tuned. I got to go get some water. My throat's killing me after that. I hope that you enjoyed the session here. If you did get something out of it, consider subscribing. We're here Monday through Friday, and Chris Pulver is up next to take over the stream. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Friday. So markets are down, and we have a rising Middle East conflict. Things escalate a little bit geopolitically. Not China, not U.S., not trade war. This is a missile strike from Israel to Iran, taking out some nuclear facilities. So we see some volatility. We see oil prices jumping up. Oh my gosh. That is a squeeze and a half, ladies and gentlemen. And this is the type of silly, this is the funny business that I didn't like about oil. It, was contain. It's like, as well as I do that this doesn't stay like this. So I'm not surprised. I also wouldn't be surprised. This is, let's find out what happens next week. But would anyone be shocked to see this thing spike up and then fade all the way back down to 65 again? I wouldn't. Obviously, if we get, much higher movement in oil, that's going to be disrupting all sorts of things for like this lower energy prices. And anyway, that's a big move. I mean, we've had a rip on oil since this double bottom around 55. Oil's up 40%. Now it was at today's high. Gold getting some safe haven flows. So we've got 3 days of upside on gold. The highs are still around 3,500. Silver has paused after a nice breakout here from early June. I still like silver a lot. If you get a pullback towards like 34.75 or 34.50, I think those are good stocks to still look to stay in it. Bitcoin hasn't really bumped a lot. So we're at 104. there's still levels to fill around the 100K mark. We could still get to like 98 or 97. That backfill would make some sense to me. There's a nice little cluster around that 95, 96 zone. There's a lot of demand down there. If Bitcoin came back to 75, I'd be a little bit more. I'm not concerned necessarily. I'd be a little bit more frustrated. Like, all right, so I guess we're not super bullish right now. We're just gonna have like a big range trade. So maybe it's a large accumulation. We came back to 75. As long as we hold probably, I'd say 95,000. This looks like just another pause and pullback, and then we'll ultimately get some risk appetite to come back and make new highs. But funny enough, like I just finished up a live session this morning, and I talked about it this week. We talked about this yesterday. End of this month, which is only just over 2 weeks away, on the 30th on Monday, we can go ahead and make this proclamation. I wouldn't be surprised if the SPX is trading less than 59.05 by the end of the month. Now, all the stuff with Israel, all the stuff with Iran, all the stuff with geopolitical escalations, all the stuff with what the US is going to say. I said this days ago, okay? This is order flow. This is liquidity. This is what I think truly ends up driving the market. The market can have some, like it can extend a little bit further one way or the other, but for the most part, this market is very like efficient and priced in. And things get a little wild. Yes, I like nobody expected the market to do as aggressive as it was through early April, and then the reflexivity of what it did, like this melt up that we had since late April and early May. But this is a price action level that was established literally March 31st and April 1st. This level, and here we are, just a couple weeks away from it. And just to see how powerful it is, if you go back to the level, this same level that I'm now saying is 59.05. The level I was watching back in Q1 was 55.65. So I'll type that out, 55.65, okay, at the end of March. Look and see how important that level was. Let's put our line on here at 55.65. So 55.65 is right there, okay? And towards the end of the quarter, look at where we were. On the 28th, okay, that would have been a Friday, and March 31st would have been on a Monday. Is that correct? I'm going to go back to March here. Sure enough. So the 28th was Friday, March 31st was Monday. Similar to how this Q2 is going to end, as we have a 30th of June on Monday. Point is we had Friday dumping hard, Monday opening lower. But what did it do? It opened lower, tested lows, and ripped up about 2+% to close above 55.65. So this strike finished out of the money. That is what I'm saying for this 59.05, is that if the markets fall below this, this finishes out of the money. That's option pricing. That's how important stuff is for where prices ultimately are going for these big expirations. End of the month, end of the quarter, big expiration. If we're below that, great. This finishes out of the money. JP Morgan can put on a new collar trade, or new ceiling, new floor for Q3. And I'm curious what those numbers are. They're anywhere between like a 10 and 20 delta. So I can look at the option chain, get a rough ballpark, and then I'll see it pop up on my liquidity levels. Okay. So I'm just throwing it out there. Don't be surprised if we're less than this by the end of the month. To me, this is a good opportunity to see if we get a pullback into some more attractive levels. Obviously, like a new wrinkle in the risk parameters of, hey, we've got this geopolitical conflict going on. Okay, so does that mean that this whole trade war takes a backseat to something else, like escalated tensions in the Middle East? How many times have we said that the last 30 years? It's always been a hot spot for conflict. So what do? I don't know. But if we get a pullback in price, I'm still going to focus on good buying opportunities with a wide margin for error. This is going to be a lot of my focus next week in our half year review. So my mid-year review, a lot of that's going to be spent talking about just safe strategies, kind of the big macro picture, and kind of my favorite assets to trade right now to survive whatever this market's going to give us. Try to make some money. Okay. Any questions? So write it down, put it on your charts. 59.05 SPX. I wouldn't be surprised if we're below this coming into the end of the month. It's only a couple weeks out. So to me, since we did not poke new highs and we're starting to roll over a little bit today, does this rollover get a little bit worse? Because if that's the case, we're probably pulling back before the end of the month, and then we come into July and see if July can be like another, maybe another bullish push. Summertime usually slows down, and this little melt up kind of rising wedge situation could also ultimately be breaking structure. So I put some pretty simple trend lines. try to be as technically sound as I could, connecting this low to this low to this low to this low to this low. And price today is actually starting to push lower. And so what I did this morning in one of my trades is I wanted to stay out of the way of the floor, but rather put in a ceiling. So the trades I have running, it's a bear call spread and broken wing butterfly up here. So if price stays below these blue lines today, I'll keep full credit on those trades. Because if I put a floor in and all of a sudden the floor just falls out, I don't want to be in the hook for what's been low volatility to then a big spike in volatility. We know that we can have like a 1.5 to 2% sell off day. I didn't want to call the bottom. So I'm sticking more with like call the ceiling today. Price is unlikely to go back to 60.50, and that's my trade. So that's my day trade on SPX. I did some rolls yesterday on Tesla. I took a winner on Dow. I've got some diagonal spreads. Let me see if the bond market's spiking at all. So TLT not getting really a safe haven bid at all. It was up to 87. Now it's back down to 86.40. Yields maybe jumping. Yep. So 10-year yields jumping again. All right. 20-year yields jumping again. 30-year yields jumping again. So it's kind of an ugly move on yields. We've got mortgages. 6.84 is the average mortgage right now. Futures market, a little wild and crazy. Anything happening? Oh, there's a big jump in the commodity index. I was literally just talking about this week. Watch the commodity space. We are seeing some moves here. A lot of this is just oil. Oil had a huge jump. So DBC, this tracks a lot of things like corn, oil, gas, soybeans. I don't know if it has nuclear in there like uranium. Let me see. Precious metals, industrial metals, agricultural sectors. Yep. So I played this actually. I played this one a lot during COVID. This is a great trade during COVID. I bought this thing for like $12, and this was my like Q1. This is my like first half of the year of COVID. 2020 was pretty profitable. We went from basically a $10 stock to $30. It's a pretty good gain on a commodity based stock. It's been pretty crappy since. Soybean oil, yeah, there's probably some stuff hitting some max levels today. I'm still long on uranium. We're at 35.80. We do have some overextended conditions here, but I put a trade in this week on Oklo. I added that to the Pulver alerts. So this one's pretty much out of the way. Like I did a 32 by 30, so it should be a pretty simple income trade. Everyone's been talking about this and chasing this and trying to get new highs. It's not my style. I don't like to chase things when it's already up, whatever, 100%. This thing's up 278%. I'm sorry, but I'm not excited about buying highs. So I positioned for a 32 by 30. I'll own shares at a massive discount. If we drop to $30, that's a 56% decline and discount. I could own some shares and say, well, I'll start my journey here, as opposed to I'm going to chase this thing after being up 200 and some percent. So anyway, just another added trade. I added a trade in on Pepsi this week. I added a trade in on Robinhood this week. I added a trade on Progressive this week. So just looking for some additional opportunities. China, a bit of a pullback the last 2 days. CQQQ still sideways. Alibaba still sideways. Baidu, again, sideways. FXI, I've got some shares of this. KWeb, nothing right now. JD, I'm still covered calls at 36. Schwab dividend, climbing back. I bought this thing back in around the 25 handle. So I got a few bucks there. Schwab growth, same thing. Bought this on the, I bought this on the 200 moving average. And when it came down to this low, so I had a buy in the 200 and a buy at support around 22.50. So my break even is around 24 and change. And I'm up a couple bucks there on growth. Advanced decline, how many stocks above the 50-day? Still trying to make a push with this 50-day. Might be the timing for the market to turn. The 200 still about 51% of stocks above the 200. Nasdaq, a lot of the stocks on the Nasdaq are getting above that 50-day moving average. This wouldn't be a surprise to see a bit of a pullback coming sooner than later if we get up towards like the 91, 92% technicals here on market breadth. This is the 200, where 67% of Nasdaq stocks above the 200-day moving average. Okay, individual stocks today. Let's go. FinViz. Doesn't look good for U.S. stocks this morning. Everything's broadly down. Market's down. Even if we fight back. I feel like we're still going to have kind of a red day overall. Financials down in a big way. That's probably the interesting, like, bright spot. Just all red for MasterCard, Visa, Amex, Capital One. PayPal's down as well. That's actually, is that a big enough move on PayPal? Let me see. I've got to trade in on PayPal. PayPal at 71. I'm going both directions on PayPal. I just needed some volatility, and we are getting it. So I am flat on this thing. I've got a 70 by 62.50. So if we drop hard on PayPal, then I've got some profit potential here. So, all right, I'll see. What else? Heat map. Bigger banks down. Boeing way down. We got another. I mean, it was down 4% yesterday. It's down another 3.64% today. Meanwhile, in the aerospace and defense sector, Lockheed Martin is up. RTX is up. General Dynamics up. So GE Aerospace and Boeing down, but some of the other, especially the defensives, are up a little bit. Energy, big pop in energy with that squeeze in oil. So I'm long Chevron. So CVX I have shares of. I don't think I have shares of XOM any longer. I took some profit on that one. So let's go here. I know I have CVX. So CVX shares are now starting to turn profit just a little bit. So let me take a look at the price action, 146 on CVX. Okay. I mean, I bought off the lows. I'm going to see if we get it up to range highs. So, back in the middle here around 160 and change, maybe back up to range highs at 180. I mean, to me, this is a pretty good looking trade without going like aggressive on the size. I'm doing like just a simple like dollar cost average in. I'm buying about $1,000, per account worth of shares. So nothing crazy on the share side. But if, roughly a $15,000 investment can pay, let's say, 30%, that's pretty good. Make a couple $1,000. So make about $4,500. That's not bad if we get up to these range highs. So I'll set a chart alarm up here around the 180 handle. And maybe consider taking some profit up there. Currency strength wise today, by the way, I do have a hard stop at 11 o'clock. I could jump into another session. As Nick mentioned, we have some risk off flows today. So dollar, was on top. It's fading slightly. The Japanese yen and the Swiss were immediately the risk off flows at 8 p.m. When the futures market ripped, and you saw some risk off trading. So you got Swiss and yen risk off. You've got the New Zealand and Aussie, which were considered risk on. You can see that's the dynamic here. Risk on currencies are the weakest. Risk off currency pairs are the strongest. The yen and the Swiss have faded a little bit. The dollars come out kind of ahead. The CAD, which is proxy for oil, ends up being on the day a little bit stronger. Now we have compressed volatility a little bit today after having that big explosive move around 8 p.m. last night. So I mean, is something going to go, expanding through the rest of the day? I don't know. Probably not. I think that was kind of a big explosion of volatility. We'll see if things just kind of contain. Okay, Bitcoin. I mentioned this one earlier. I don't mind getting pullbacks on Bitcoin. I personally, I mean, I guess I don't mind it if we pulled back to like 75, although it wouldn't be fun. It wouldn't be fun to see a big pullback like that. But I think we could backfill like 100K. If we came back to 98,000 or so. I mean, this low is around 100K. We come back to like 98,000. That's a pretty good support level. We got a lot of chopping here around 97 to 98,000. There's also a nice inefficiency around this 92 to 87. So between like 98, 92, and 87, I like all those spots for maybe some add-ins, which is what I'm doing with IBIT. IBIT, I'm just buying more levels. So if it comes down to like $56, I'm buying a little bit. Comes down to $52 and change, I'm buying a little bit. Comes back down to $44, I'm buying a little bit. So I'm just going to level in. Okay, nothing too crazy. Let's see what the world is doing non-US. So let's go world. A lot of red today. China's down. Europe is down. We got some UK that are doing okay. Again, oil. I mean, BP, that's oil. Shell oil. BTI, that's British American Tobacco. I have actually some trades in that along with MO. This is more of like a dividend play. Like MO's been doing well. This is one of my better performing dividend stocks. Bought this thing at $40. Have nice price appreciation plus a 7% dividend. BTI is kind of the equivalent of that with with a non-US holding. So bought this thing around $31. It's up to $49. It's obviously a lot of gains for a boring stock, but it also has a nice, 6% yield. So just letting price go plus giving the dividend kicker, that's pretty good. What else? We did Bitcoin, oil, gold, silver, dollar, currencies, indexes. We are still just kind of hovering around the gap lower today. Price is pretty centered. So I mean, we open up around 6,000 and we're trading around 59.91. So the market's not bleeding too bad. We're still down less than 1% after roughly it was almost a 1% gap. So from this high to the open, market was down about 0.75%. It's just pushed a little bit lower, but not too bad. Let me check a couple of trend lines here. Let's go bigger time frame. So that's the trend line that I'm watching. Is it noisy at the trend line? Are we actually rolling over this trend line? We'll find out based on today and tomorrow, or today and next week. If we go to the NDX, couple of trend lines here on the tech play. Are we actually breaking these trend lines? So connected the low, the low, the low, the low. If we're breaking that trend line, do we break the bottom from April 7th to this pullback in, this is April 21st, I think. That was when we had that pretty nice pivot off of Monday. Yeah, so we had the 7th and the 21st. You connect those bottoms. If we're on the right-hand side of that, I think this US-China trade gap gets filled. This is just, market tried. There's the high, there's the low. Market tried. If the market rolls over, it's fine. It's just going to be maybe some noise in here, right? I mean, if we know how to make money in a noisy market, that's good. I don't have to be bearish right now. I just have to be patient. If the market's going to fall, great. If it falls enough, I'll make money on some hedges. If the market falls, I'll probably start selling some more premium. Okay, but my premium is going to be, trying to get a big margin for error. I mean, if I'm selling premium, I want my positions to be like way down here. 17,000 down to like 17 or 16.5 on NDX. If I'm going, SPY, that low was like 482. So I would be selling probably 111s, maybe some naked puts around like the 480 handle and just collect a little bit of premium if we have a decent jump up in volatility, which I mentioned that this week. I mean, I don't think anybody be super surprised to see the VIX spike back up into the 20s. What did we do today? We spiked into the 20s. VIX was up to 22 today. And that's nothing. Like, could we go to 24, 25 and a little bit more risk off trading? Sure. Are we getting back into 30 plus VIX? Probably. I mean, maybe not unless things really escalate. But just having a little bit of ventilation where it's like, look, this was one of the largest volatility crushes that we've ever seen in 30 years. Okay, so what happens? Well, there's clearly some time for volatility to like poke its head again. If I wanted to look at SVXY, I mean, that's not really enough to get me excited. If we had like a bigger spike or a decent decline in SVXY, then I would probably start buying in and look for a reversion on volatility. But we don't have it yet. Dollar index. Look, if you've been following me the last couple of months, what have we been talking about in the dollar? I mean, when we had this first break of these lows, I said, look, this is a good spot to be looking to sell the dollar. It worked out. If we broke the trend line, you sold the backside of the trend line retest. It's a good spot to sell the dollar. I said, if you're getting into these lows, take some profit, trail the stop losses. Don't sell at the bottom. I wouldn't be surprised if this low is going to hold. Okay. And the better trade, in my opinion, with the least amount of risk would be to buy the dollar. If you stop out, okay, fine. I don't want to call the bottom here, right? But I do think that a bottom is much nearer than people think. We had that big spike in the euro. That was I think that was a stop loss play, right? Why? Because everyone was shorting the euro with stop losses above this high. So what price do? Come up and poke it. I wouldn't be surprised if the dollar, turns and starts to work its way back down. So euro dollar, and I said this week, if you're watching for confirmation, wait. Let's see if price forms a topping pattern. Maybe makes its way back down to the same lows again. Maybe pulls back a little deeper. That's fine. But this is the trade I had on the euro dollar. I was long and I took profit just before the high. Okay, that's what I want to do. I don't think the euro dollar is going higher. Not right now. I think the dollar index is going to turn and probably head back up to a range trade around that 101 to 102 handle right there. So do we pull back to, 101, 102? Yeah, maybe. If we do, it's not a surprise. So just be like a bear trap at the lows using this range. I think that, medium to long term, the dollar gets weaker. I really do. I think the dollar is likely going to get weaker. I think gold right now is being given a much better pedestal to be like a better asset to hold and trade. I think that Bitcoin is becoming that better asset to hold and trade versus fiat, versus the dollar. 2025 has probably accelerated this whole idea of dollar weakness and debasing the currency pair, challenging the fiat system. 2025 has accelerated this entire narrative, which I don't think is a bad thing. I just think as a trader, we can keep it really, really simple. It can be gold, silver, SPY, Qs, Bitcoin. That's 5 things. If that's all I trade in my portfolio, that should be pretty easy to manage. So I turn up, I turn down, I keep my percentages pretty consistent. And I think that's a good way to stay somewhat diversified, but also benefit from, gold and Bitcoin. I think could be great, like asymmetrical assets with this like anti-fiat play. I also think that in the broader market, S&P and Nasdaq are always resilient, and they're trying to find ways to have even the best companies, even if it's only 10 companies, it can still carry the entire market higher. You know, so anyway, it doesn't have to be hard. But with those core positions, I want to sell options. I want to lower my cost basis. I want to be able to hedge and protect the downside. Every 3 to 6 months, every 6 to 12 months. I want to have some protection out there. That's the one thing I think every trader needs to understand is if you can properly manage risk, money is easy to make. If you can't properly manage risk, you'll struggle. I mean, think about that. Like if you can bulletproof your floor, yes, it's going to be dented. It's like you're going to have some losses, okay? But if you can bulletproof your floor, where you just start winning and winning and trading with confidence and not letting risk be a thing that's like, please, I don't want to lose. Look, you got to just trade responsibly. This is why I'm such a big proponent of risk-defined trades. I don't want months and months and months of good trading to be ruined by one silly event. It happens way too often. I talked to a trader this week that like crushed it last year. Like was I don't know percentage wise, but talking like literally 6 figures of profit, and turned into this year gave it all back because of February, March's pullback, because of February, March, April, gave it all back and then some. And so even with this melt up, he's kind of back to break even. That can be really frustrating for any trader to have like good stretches of months and months and months of progress and months of profits, and then have the market take it all away because you don't manage risk very well. So when you manage risk and you bulletproof that floor, it's easy to build off of a nice solid foundation. So that's really my job. My job is manage risk better than most, and that helps me make money. And making money on the upside is pretty easy. So anyway, we'll talk more about that next week in the mid-year review. Any other charts, any things you want to take a look at? I'm gonna bounce out here in about 13 minutes, so we can take a peek top and bottom. Safe haven demand amid rising. What's funny is safe haven demand, but the U.S. bond market isn't catching a bid at all. TLT is actually down about 1% today. Equities are down, and so are bonds. So I just still think the U.S. bond market is in a really interesting spot. It's kind of a pickle. I don't know it just seems like nobody wants it. Like if anybody wants U.S. bonds, it's like give us a 1-year bond, give us a 3-month bond, give us a 2-year bond. Like nobody wants duration anymore. It's way too sensitive when you're forced to have 10, 20-year duration holding to maturity. And I mean, that's what happened in 2023. If you followed that Silicon Bank crisis and First Republic and what was the other one? I think it was mostly SVB was the big one, Silicon Valley. But that regional bank crisis was mainly because of 10 and 20-year bond holdings that were trading for like 70 cents on the dollar, 80 cents on the dollar. And in order to have that liquidity, they had to dump those bond prices at a huge loss, and they were declared insolvent. But the Fed obviously backstopped it and jumped right in and added liquidity to it. But that's the silly stuff that happens with some of those mandates is, you're forced to have all this duration on the books. And all of a sudden, when people come wanting money back and you don't have the liquidity for it, then that's how a regional bank was fundamentally very strong, but was actually insolvent because it didn't have the ability to hold things until 10, 20-year maturity. Okay, dollar Swiss. Yeah, I'll take a look. Dollar Swiss. Dollar Swiss kind of similar to the dollar index, right? I mean, dollar Swiss in a lot of ways is inverse of euro dollar. So if the euro dollar is, there's your high, there's your pullback, there's your high getting tested. If this thing turns south, I wouldn't be terribly surprised to see the dollar Swiss turn back north. Okay, maybe. I mean, obviously the bigger picture here is also this dollar Swiss has to break this trend line. If the dollar Swiss holds this low, breaks this trend line, I think we head back up into this pocket. But until this trend line breaks, this is guessing where the bottom is. And I don't necessarily love that outside of maybe a round number here, 8,000, and just see if it holds. Because if we hit, like right here, we have equal lows. If we hit a little bit lower and we have divergence where price goes lower, but momentum and relative strength show divergence, then that still potentially offers up a low that we can trade from. So I'm still holding. Call me crazy, but I'm still holding long dollar Swiss. I took a lot of profit. Excuse me. I took a lot of profit there. Cleared up about 20 some positions of profit at 9,200. I started to scale back in around this fall. So this fall, I started to get back in. I've ridden this thing out a little bit longer. I'm trying to get back to about 8,750 to 8,800. That's my profit target. And I'm not done. I'm just going to stay really small and scale into this thing. But if I can see a bottoming pattern here, then I will, trade accordingly, position accordingly, and see if I can get a break on the right-hand side of the trend line. To help, dollar Swiss. Dollar yen, still choppy. The big floor is 140. The big range is maybe the 149, 150. Dollar CAD still sliding lower. I'm interested to see if the dollar CAD comes to like a 134, 133, 132 zone. We have lows here around 132, 131 and change. I mean, I'm going to buy some dollar CAD down here. So if we go to these levels, I'm going to buy some dollar CAD. So I'd like to see maybe some pivots missed and some inefficiencies, some oversold conditions. But if we get back to these levels, yeah, I think there's a good spot to scoop up some dollar CAD. New Zealand dollar, we'll see. I like a pullback towards like 58.50 or so. New Zealand yen, no trade. New Zealand Swiss, I'm still kind of hanging on to. This is just getting beat up from a risk off perspective. New Zealand CAD pulling back. I might get that 50618 fill that I want. I'm looking for a swing trade on New Zealand CAD and Aussie CAD. Pound dollar, no trade unless this thing rolls over on the trend line. Pound New Zealand, nothing. Pound yen, nothing. Pound Swiss, ooh, this actually had a pretty nice pullback. If pound Swiss, this isn't bad. Small trade here, and then maybe another trade at the lows. We're right at the 200 moving average, but I'm looking for this pocket to get filled. I'm not going to trade it yet. I'm just going to wait in case this risk-off trading gets a little bit worse. Pound CAD starting to roll over a little bit. Pound Aussie, Euro dollar we talked about. Euro New Zealand risk off trading, so it's going up. Euro yen still squeaking out a little bit higher highs. Euro pounds, this one's been way more volatile the last couple months. Not in a bad way, just more volatile, which is interesting. Euro Swiss, I'm still holding long. This one, hopefully we head back up towards like 96.50. Euro CAD, I like the idea of selling like a 5,800 and a 6,000 high and just kind of staying with this trade. This could be a head and shoulders. It's kind of an ugly one, but this could be a head and shoulders setup. Where if we break this neckline, then there's room to measure. So symmetry gets us back into this inefficiency around like 51 or 5,200. Okay, Euro Aussie, little risk off trading. Swiss yen. Swiss yen is favoring the Swiss over the yen. Maybe going back to highs again at 180. I'm not going to take this trade. I don't want to do anything with negative swap. But if it comes back to 180, does this actually turn? Trendline break, does it turn and go the other way? This is just a big range trade, maybe. I mean, that could be a good looking setup. I just don't know if I'm going to trust that enough, especially with negative swap. Nothing on CAD yet other than maybe believing that we're just going to stay making higher lows and higher highs. CAD Swiss, hopefully we get a nice little rip to the upside. I'm holding long on this one. Aussie dollar, want to see some pullbacks. Aussie New Zealand, I'm still buying in. Aussie yen, right side of the trend line, but just be careful on yen crosses as always. Aussie Swiss, waiting, like maybe this is my pullback, right? Maybe this is my low to high. This is just a pullback area. So once it's ready to kind of hold the lows and then we work our way back up, we have lots of past support in here. We have a nice little moving average cluster. Maybe that's my symmetry. So low to high, higher low to higher high. I'd like to see a 5-wave move if possible, but not there yet. I'll get to oil in a second. There is Aussie CAD. I'm looking for this like 50618 swing trade on Aussie CAD. Let's go to oil. You know, just a monster spike in oil. I mean, if you do anything with oil right now, it's a reaction. I mean, the smart play in oil would have been you're buying off the double bottom with a tight stop loss at 50, $50 roughly, and it's gone up 40%. I mean, right now, what do you do in oil? Nothing. Like, to me, this is still not necessarily a buy trade. Like, the buy trade was here with low risk and like trade it back to 65. And you got the squeeze to go above that. I don't want to chase this thing. I mean, it's already at 40%. What are you going to do? Buy oil now? I don't know. I don't think so. To me, this could be a fake out, fake out, fake out. This whole thing could also be a fake out. This could be like what was, the most hated trade, which is like long oil was a hated trade. So everyone's bearish, bearish, bearish. Sentiment is super bearish on oil. What happens? We squeeze. So now all of a sudden people are pivoting. They're dumping positions. Everyone that was short oil is getting busted up. I just think it's a noise. It's a bunch of noise. So I want to see how oil settles before I would consider taking a trader position. Make sense? So to me, this doesn't really prove anything, because if today's candle forms like this and it's like half body, half wick, going into next week's trading, are we red and going back down again? Or is it more green, more? I mean, I have no idea. But to me, this is some really aggressive price action that is now making some. It's gonna flip orders. Everyone that's been bearish is now. Are they going to chase? Everyone that's bearish is now getting stopped out, so they're no longer short. That just propels a short squeeze. Okay, so I'd say let's just wait. Let's wait and see how oil settles and make an assessment. Not a one-day reaction. Okay, dollar we did. Just watch the lows. Be careful. I think this thing will hold the lows. Okay, again, I'm not calling the bottom on the dollar. I'm just saying that as a technical trader that sees oversold conditions with divergence at these same lows, I'm way less interested in trading the dollar short and more interested in maybe seeing a bit of a correction on the dollar to the upside. Okay, again, VIX on the day, had a big jump to the upside into the 20s. It's faded a little bit, but if you go to like a 10-minute chart here on VIX, pretty noisy for like opening bell. I mean, we opened up here. Here's your 9:30 open. VIX was going higher, so price was dropping a little bit, and now we're kind of fading. So I don't know. I mean, just get a read on the VIX. Maybe it's just noisy on the VIX and price stays noisy all day. This for the day, it's like maybe it's just a big island where price action gaps but doesn't really go anywhere. Just trying to zoom in. So we have close yesterday, gap lower, price is just hanging out here. We are on the right-hand side of the trend line. So, I mean, just looking past today's price action, let's say that today it sits here with a gap where we're not at the high and we didn't really do any crazy damage to the downside. We're just down. Like the markets are down today, but this will be an important candle for next week. Because if we break and go lower, there's nothing stopping it. We break and go higher. I mean, we come back and fill this gap. We come back and maybe get to the highs around 60 again. But if we're in the middle, like this is why, maybe some noise trading on Monday. And if we break and go lower on Tuesday or Wednesday or Thursday, Friday, like I'm hoping that Monday is just not a big directional day. If it is a directional day, then we just have to be prepared for it, right? So anyway, that's just what I'm reading from this price action here. It's like we've broken a nice clean trend line. We're holding right here in this kind of no man's land. If the bears take out this low and start eating into some gaps here in 594, take out some lows, that big China US trade gap is all the way down here to like 580. Could also be all the way down here towards 565. There's a lot of potential for this thing just to roll over a little bit. Is it all going to be driven by risk off trading? Is it all Middle East tensions? Maybe. I mean, it shouldn't be. It's like the markets never really had that adverse of a reaction from a little conflict. Now, if it's a war, then yeah, things can get a little bit nastier. But if it's just like, okay, what are we going to do? talk to Israel. Let's try to work out something. We don't want to have a major conflict in Iran. I mean, it's like that's above our pay grade, you know. So, all right. I do have to run. I did oil, gold, silver. We did Bitcoin, did a bunch of stocks, looking at the indexes, watching price for next week. Write this number down on the SPX, 5905. End of the month, I think price is going to be below that. It's just basically a quarterly ceiling price that we've ran above it. So I think we're possibly going to come back and get below it for a out of the money finish. But I just think there's a bit more of a risk off tone, and whether it's just like the start or preview of things to come, we'll see. Or maybe this rolls over and officially this trend line is breaking and the bears are going to take over, the bulls kind of fold. Time will tell. We'll find out. Like how today closes. Let's find out. We'll find out on Monday next week. Next week is the Fed on Wednesday. They're unlikely going to change. It's like a 97% chance that it's still a pause. Powell is speaking. I'm curious what the Q&A is like. Do they try to drum up some drama between him and Trump again? That with the survey or rumor has it that your replacement's already in. Blah blah. I mean, nobody knows. So I hope Powell just takes the high road, does his thing. Inflation's probably the biggest focus right now for the Fed, not getting and cutting rates too early. Although some argue that they're already behind right now. But I don't know. I mean, inflation obviously printed a little bit higher. We went from headline 2.3 to headline 2.4. Oil's up, 40%. Does that mean more inflation coming in energy? Possibly. The biggest way we feel inflation right now for the US is pay at the pump and cost of goods. If services are more expensive, if goods are more expensive, if pay at the pump is more expensive, that's what we notice. That's not core, because core excludes food and energy, right? So anyway, and super core excludes housing, which is also high. But headline is still sticky above that 2%. So, all right, I got to bounce, and we'll come back to do it again next week. Lots of exciting stuff happen next week with FOMC, trading battle, mid-year review, and sessions per usual. So thanks a lot. Have a good weekend, and we'll see you soon. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.